Bitcoin price searches for direction ahead of this week's $710 million BTC options expiry. BTC's recent price swings are the result of regulatory pressure and the Federal Reserve's stance on U.S. inflation. Market analysis own this piece of history. Collect this article as an Bitcoin, BTC. Bulls laid most of their options at $24,500 and higher for the March 3 options expiry, and given the recent bullishness seen from BTC, who can blame them? On February 21, Bitcoin price briefly traded above $25,200, reflecting an 18% gain in 8 days. Unfortunately, regulatory pressure on the crypto sector increased, and despite no effective measures being announced, investors are still wary and reactive to remarks from policymakers. For instance, on February 23, U.S. Securities and Exchange Commission Chair Gary Gensler claimed that everything other than Bitcoin falls under the agency's jurisdiction. Gensler noted that most crypto projects are securities because there's a group in the middle and the public is anticipating profits based on that group. March 1 comments from two U.S. Federal Reserve (FED) officials reiterated the necessity for even more aggressive interest rate increases to curb inflation. Minneapolis Fed President Neil Kashkari's and Atlanta Fed President Raphael Bostic's comments also decreased investors' expectations of a monetary policy reversion happening in 2023. The stricter stance from the macroeconomic and crypto regulatory environment caused investors to rethink their exposure to cryptocurrencies. Nevertheless, Bitcoin's price decline practically extinguished bulls' expectation for a $24,500 or higher options expiry on March 3, so their bets are unlikely to pay. Follow the URL for the full article. For more on this story, visit the news article link.